really diving into the sponsor you're going to invest with. Go have coffee or lunch with them, meet them in person, do background checks on their owners, ask for referrals, give them a call, make sure that you're really going in.
Welcome to Multifamily Insights. I'm your host, John Kasman, and I want to thank you for joining us for another great episode. Listen, if you're enjoying this show, do me a little favor, help me, help you, and help others, all right? Leave us a rating and review. It helps more people find the show, but also gives us some feedback on anything we can do to make the show work harder for your investing goals. And if you haven't done so already, make sure you hit that subscribe button so you don't miss an episode. We got a great show today. We're going to be talking to Lauren Brychell. Hey, Multifamily Insights listeners, if you're looking to invest beyond multifamily, make sure you check out the Invest Beyond Multifamily Conference this fall, Wednesday, October 11th through Friday, October 13th, here in Cincinnati, Ohio. Listen, you're going to learn how to invest in non-residential commercial real estate and master the art of scaling your commercial real estate business. Now, this event is being hosted by Ash Patel, guest on the show, and he's featuring great speakers such as Nate Barger and Joe Fairless. If you want to learn how to invest beyond just multifamily, be sure to check out this event October 11th through the 13th. All you have to do is go to investbeyondmultifamily.com/fall-conference. Again, that's investbeyondmultifamily.com/fall-conference. Now, Lauren Brychell is the Investor Relations Manager for Spartan Investment Group, LLC. In this role, Lauren brings her skills in capital raising and self-storage investing to assist the team with the capital raise projects and investor education. Let's welcome to the show, Lauren Brychell.
Thank you so much, John, for having me.
Absolutely. Hey, Lauren, great to have you on the show. I went over your bio at a very high level. Why don't you take 2 minutes and fill in some of those gaps?
Sure thing. Thank you. So a little bit, about me and what I do at Spartan. I came from a marketing background and kind of took my marketing and personal skills and wrapped them all into one to become the investor relations manager here. So essentially what I do is I get to educate investors on passive investing, self-storage specifically as an asset class, and help them through their investing journey every single day. And so building the relationships with these investors and seeing them grow their wealth is very rewarding for me. So I've been having a great time here at Spartan.
I love it. Great to hear. And I appreciate you sharing the UK from marketing background. Many of our listeners know that I also came from a marketing background. So let's just start there. What were you doing in marketing and how did those skills transfer in your opinion?
Yeah, that's a great question. So I originally started my career actually in influencer marketing with professional athletes. And so that was a really fun way to kick off my career. And then when I came to Spartan pretty early on, I did all of their property and corporate marketing. So it definitely opened my eyes and had me grow as a person to how to learn, okay, how do I market this self-storage property in a tertiary market? Where are the local communities? Where are people looking? And so those skills really opened my eyes to even just marketing to investors. How do you find investors all across the country and what are they looking for? But it was really fun. I got to help build our national brand, Free Up Storage. We didn't have one when I first started, and now we've got 65 facilities under that brand. And so that was a great project we worked on for a couple of years, and we've really taken our investor relations marketing to a new level as well since I've been here, with all kinds of marketing drip campaigns and taking our email education to the next level. And our CRM, we've built out a database there as well. So all kinds of fun projects along the way.
So I love that, right? You talked about, being able to come from the influencer marketing, working with athletes to working with Spartan, start with their national brand, Free Up Storage, and then really taking a look at more of the investor communications aspects and expanding those. Many of our listeners are active investors looking to start working with other investors themselves, raising capital for deals, or just looking to expand what they're doing. When you kind of came into this position, what were some of the things that you noticed were opportunities for improvement that you started to spearhead?
Yeah, great question. So some of the most immediate things that we tackled were having a great investor experience from start to finish. So starting with a great investor portal somewhere that they could log on, see their investments, look at different charts and reports that come out each month, being able to have a seamless investment process and having a really nice looking interface. So that was one of the biggest things that kicked off our investor experience journey. And then from there, ensuring that we had really nice marketing materials for them to look at as well, having a nice offering memorandum that really laid out the markets we were investing in, the properties, what's great about the property, where are the opportunities for the value add improvements, and just making it very clear and nice to look at for the investors to be able to compare projects and different opportunities, apples to apples. And then another thing is that we really helped catapult us into the next level is having a really nice track record for investors to look at. You know, you have the whole notion of know, like, and trust with investors, but having a nice document to outline all of your successes and maybe even some of your failures in a track record, so you can be transparent with your potential investors and have them see, okay, here's what we've done, and we have done things, and here's how they've went, has been really, really great.
No, I think that's great for everyone to understand, right? So first thing you said was the investor experience. And I love that you talked about it as the investor experience or the investor journey. What does that process look like from that standpoint, using kind of their lens to view kind of what that experience is? But first is the portal, right? That investor interface, the website, where they get their information, the documents, all those kind of things. Next, your marketing materials, improving those marketing materials so you can clearly communicate the project, the highlights, the things they need to pay attention to, make sure those marketing materials are strong. And then last, the track record, making sure that you highlight the track record, the wins, maybe even some of those losses, so you can be transparent and give people the information that they need so they can make a sound decision on whether or not they want to move forward with that investment. As you look at the marketplace now, obviously a lot has changed over the last year or so, mainly with interest rates rising, and investor sentiment has started to shift. How have you seen that investor sentiment shift? And then what are some of the things that you and your team are doing to address that or to kind of counterbalance that?
Sure. It absolutely has shifted. And I think it's honestly kind of a good thing that it's shifting. People and investors are being a lot more careful about who they're investing with. They're doing a lot more due diligence on the properties, the sponsors, everything else, which I think is great and very important. You should be going out and really diving into the sponsor you're going to invest with. Go have coffee or lunch with them, meet them in person, do background checks on their owners, ask for referrals, give them a call, make sure that you're really going in and understanding, are they doing fixed rate debt or floating rate debt, which is huge, obviously, right now, more than it has been in the past. And I think that got some folks in trouble. And so just really diving into every aspect of the deal, making sure that the underwriting is as conservative as you would want it to be if it was something that you're putting your money into. So I think from that perspective, it's been really good that investors are asking a lot more questions. And another part of that investor experience is making sure that your investor relations team is trained up and educated to help these folks, make sure they know all of the answers or as much as they can to come prepared to these calls and not waste these folks' time.
Yeah, I think that's really important, right? That due diligence goes a little bit deeper, especially when the market and the economy is a little more challenging. So investors are asking more poignant questions, taking their time to get to know operators, and just making sure they're making a good decision. Really good points there. Talking about self-storage, right? So people, listening are pretty familiar with multifamily. We certainly know what self-storage is, but why should people consider self-storage, especially when the economy isn't as strong as it was?
Yeah. So self-storage historically has been a pretty recession-resistant asset class. The people who use self-storage are using it because of life events. They're moving, downsizing, there's a death in the family, they're going through a divorce. Those types of events happen during economic upturns and downturns. So historically, occupancy has stayed pretty steady. I will say rents may or may not be softening a little bit. We're starting to underwrite some of our new development deals with rates actually going down instead of increasing a little bit, which is just part of being conservative. But another thing, and why we really got into storage to begin with, is it's a lot lower overhead. There's no toilet, there's no tenants calling you at 3 a.m. because their water heater broke. There's maybe 1 to 2 employees per property to take care of everything, and people can't take your unit when they move out and destroy it. It's a metal box with a concrete floor, and all you need to do is sweep it out to turn it over. So just from that perspective, it's really nice, low maintenance, low overhead.
I think it's really important to understand that, some of the benefits are, well, one, you're not dealing with tenants, so all you have is a box. And then if someone decides not to pay, you don't have to go through this long eviction process. Talk to us about what that
Yep.
process actually looks like.
Yeah, that's another great point. So essentially, every state has their own rules and regulations around the eviction process, but high level, someone doesn't pay, usually it's 30 to 60-day process of overlocking their unit, starting the late fees. And then if they don't pay after that, then essentially you can just auction their stuff off. And while that isn't necessarily a revenue source for us, any money that comes from that auction does first go to paying back their late rents and overdue rents. And then anything above that would just go back to that customer. But there's no rent moratoriums or anything else, eviction laws around it, other than if they don't pay the late fees, they're out. We don't have to go to court, deal with any attorneys. There's no emotions involved like it would be if you were to go to someone's apartment, overlock their unit, and say, sorry, you can't go to your house until you pay us.
Yeah, it's not like a protected class with all these other, rules in place and, having to wait and all that stuff, right? So it's pretty straightforward and
Right.
clean. And I know that's one of the things people like. I always hear people say that, hey, it's recession resistant, right? And, when times are bad, people, put more stuff in storage while they downsize. When times are great, maybe they're moving and they're putting stuff in storage as they travel more, do whatever else. Have you seen that to be
Yep.
true? I know that again, it's one of those, I don't want to call it a myth, but it's something we hear very frequently. But I'm curious to see what the numbers actually show in reflection of that.
Yeah, honestly, we do see that to be pretty true. About 70% of our customers are people based on those life events. And the other 30%, for the most part, that's an average number, of course, but those are just small businesses. Same thing. If you have a catering company, you need to store your stuff, or a landscaping company, we'll see them come in the morning, pick up their equipment. At the end of the day, they'll come back, drop it off, and start all over. So people like that are usually, for the most part, always going to have those businesses. They need somewhere to put their equipment. And so, yeah, it does stay pretty steady, which is great.
Now, what are you looking for when you talk about self storage and finding a new asset? What are some of the metrics you're paying attention to when you scour the marketplace?
Yep. So we have about 700 points of due diligence on our checklist,
Wow.
but high level things that we look for, especially when going to purchase an existing mom and pop facility or going to build in a market, are really the net migration trends. So where the people are moving, where the jobs are going, is where the people are going to need storage. So we kind of look to where the migration trends are, especially in the southeastern states where people don't have basements as much as they might in the Midwest. Where are they going to put their stuff? They might have a boat or something that they can't put in their driveway because of an HOA, so they'll have to put it in storage, or sporting equipment, or again, just lack of space in their homes. And then usually another metric we look at is most people will rent a storage unit within a 7-minute drive time of their home. And so looking in that area, okay, are there new master plan communities going in? What do the competition look like in this area? Is there high demand still for additional units? What are the rents being charged? There's all kinds of things to look at, but essentially where new multifamily units are going in, people are going to need storage there. So we kind of just follow those on a high level basis.
And is there kind of a geographic preference? You started to mention, the Southeast region doesn't have basements, but is that part of the investing strategy, or what do you look at from a geographic standpoint?
Geographically, I mean, we're in 11 states. Some of them are the Pacific Northwest and Colorado, but Texas, all the way over to Florida, up to the Carolinas, it's just where a lot of people are moving. The net migration trends are really high over there. And so that's where we've been buying and developing a lot of storage.
So how do you manage that,
We
right? You
will
talked
look,
about the Pacific North, Northwest up to the Carolinas, Texas. So how do you manage that?
Great question. So we have regional property managers all across the country. We've got construction folks all across the country. We're based in Denver. We have a capital office in Seattle. We've got 120 employees across the organization that oversee all of our management in-house and our construction. And so where we're doing ground up development projects, we'll send someone out to live there for a year or 2 years while they're overseeing that project. Same with the property managers in the area. They're all local. And so on the operations side, they travel a lot, of course, meeting with the teams each week and making sure that there is boots on the ground to make sure everything's going well. But a lot of it is automated today as well. We do have management at each facility. But other than that, all of our customers can book and pay online if they wanted to. They never have to talk to a manager. So we've really streamlined it for a great storage customer experience as well, to be able to do everything from their phone on the way to their unit, being to book it same day.
Yeah, I think there's a lot of, a lot of great information there about just how you manage it, but both using technology, recognizing kind of how you have personnel through the, again, out in Seattle, out in Denver, managing those teams. I think it's really important to understand that. I know that, the leadership team there is pretty stout and very specific with their checklists and, their checkpoints and all that kind of stuff. You mentioned the seven checkpoint process for acquiring a self-storage facility. I'm pretty confident that the construction process and the management process is pretty intensive as well. What's something that people be surprised to know about maybe the way you all manage your properties that maybe other groups or other things you've seen you don't see that quite as frequently?
Yeah, I would say some people might just be surprised that everything is in-house. It's kind of rare these days to see all the property management in-house. We don't do third party. We don't do third party construction. The way that we go about doing everything, to your point, with our leaders coming from a military background and then a commercial airline pilot background, they love risk mitigation processes, procedures, checklists, pre-mortems, all of that stuff that, they always say, this isn't life or death. This is storage units, right? So it's pressing, yes, but let's step back and let's look at what are the issues, what's going on, how can we improve this? Nothing is that emotional, which is kind of nice to be able to just look at the facts and kind of take step forward from there. So I think that's something that's surprising is, I guess, just how regimented and process driven we are with everything we do.
Yeah, I think it makes sense too. And when you talk about it, when you can step back, remove the emotion, it allows you to really just focus on the issue at hand. Talk to me about what's next. What are the things that you all are working on for the balance of this year and heading into 2024?
Yeah, we're really excited about continuing forward with storage in the future. Purchasing, I think we want to get our portfolio to $1 billion of assets under management here shortly. We're at about 550 million, I believe, last time I checked. And so we've got a little bit of a ways to go there, but still focusing on sticking true to our roots and our checklist of our tried and true criteria on where to buy, which properties to buy, and just scaling up from there. We are looking maybe at some more boat and RV storage in the future, scaling that side of the portfolio up a little bit, but we see a lot of opportunities in storage development right now, especially with rates higher and it's harder to find cash flowing value add assets in today's market. So we're really getting lucky and finding some really great opportunities for development.
So when you're talking to investors about, investing in maybe a new development deal versus an existing asset, what are some of the common questions you get?
Sure. Common questions are about the risk profile. Of course, development is typically more risky than just buying an existing property. Some way that we mitigate that is a lot of the times when we're purchasing these properties, we won't close on them until they're shovel ready, permits in hand, ready to roll. So that takes some of the risk out of it. And, investors, especially passive investors, oftentimes do ask about cash flow and what kind of cash flow they'll be getting on a development opportunity. Of course, there's really not cash flow until we build it, we lease it up, and there's enough revenue to spit off some cash flow. So that's a little bit different. People who are looking just for upside versus cash flow. But other than that, people just really like to dive into the market. Where are we going? Why are we investing there? What makes that property so special? What are the competition in the area look like? And so it's not too different than honestly a value add fund or property that we would purchase. But I think people actually have really taken to the idea of development projects. They're like, I don't need the 4 to 8% cash flow. I just want to see some big equity upside. And so they're really excited about it.
Yeah. What's the time frame? So you mentioned if it's shovel ready when you kind of close or going to or finish up the contract, I guess, to the time that it's up and running and maybe kicking off a little bit of cash flow. What's that time frame typically look like?
It could be 18 to 24 months plus. I mean, usually around maybe 18 months to build. Could be a year to a year and a half to lease up, just depending on where in the market that it's at. Like for example, we're looking at purchasing a property in Texas that's about 50% leased already. It's been open for about a year, but it's the number one top rated property in the country. And so there's low competition. So we've just got to take that and lease it up even a little bit more. So it honestly is just so market dependent. Some properties lease up extremely quickly. Some take a little bit longer than you expect. But for cash flow perspective, I would probably say on a 5-year target hold fund, I wouldn't expect cash flow before year 3.5 to 4 on the low end.
Got it. So it takes a little bit of patience, like you said, more of an appreciation, more of an equity upside type play as opposed to immediate cash flow. But it's a great way to add to your portfolio and kind of, have that longer term value add there. Given the kind of delay on the cash flow, uh, and again, I don't want to get into projections, but do you have any metrics or any criteria you use to say, yes, this is going to be worth it for investors if they wait? I'm not sure what that criteria is typically.
Sure. Like if they wait for another offering to come around, or do you mean wait
Well,
for the
do
equity
you
upside?
do you have like I don't want to say like a target metric, but do you have, I guess, any baselines that you utilize when someone's looking to invest in, a project that's going to take 3 or 4 years before it's delivering any returns to investors?
Yeah, I would say kind of high level, our expectations on the low end for a 5-year hold project would be about double your money. So that's what investors usually expect, and that's what we expect to give as well.
Got it. So there you go. And then obviously, there could be more than that, but on the lower end of expectations, there's there. Again, this is not for projections. Throw out all my disclaimers right now. But again, obviously, if that's something you're interested in, I advise you to reach out to Lauren and learn more. You can reach out to her at spartan-investors.com and learn a little bit more about some of the projects the Spartan Investment Group is working on right now. Right now, Lauren, we're going to go to our round of insights. Are you ready?
Sure, do it.
They say you're the average of the 5 people you spend the most time with. So if you want to grow as a multifamily investor, you have to spend more time with other multifamily investors. And an easy way to do that is to join our apartment investing mastermind group today. Just go to casmancapital.com and click on the mastermind button. Now, as a part of this group, you'll get access to expert trainings, group coaching calls, industry news and updates, as well as all of our webinars and workshops, including our 3-hour workshop on raising capital. Again, if you want to be around other multifamily investors that can help you scale your portfolio today and grow your network, make sure you're a part of the Apartment Investing Mastermind. Just go to casmancapital.com and click on the mastermind button today. All right, give me a failure or an apparent failure that set you up for later success.
Oh, great question. So one time I was planning an event for kind of a conference type thing, and we locked ourselves into a hotel contract. Ended up not having the event, and we're stuck with this massive hotel bill. And so that really taught me to be conservative with contracts, not to, overpromise kind of what you think you can achieve in terms of attendance, and then kind of back it up from there. So it's really taught me to be extra conservative. Ask for a retrade in a sense on these hotel contracts, and give yourself a little bit more flexibility to not get stuck in that situation again.
Give me an app or a digital resource you recommend for your business.
I love Audible. I'm a big fan of reading audiobooks and doing that on your driving and out of the office each day, on planes, and just maximizing all the time you can, listening to different educators and learning new things every day.
All right, give me the book you've recommended or gifted the most in the last year.
Think and Grow Rich. I feel like it's just a great foundation for a book that everyone should read. And I've gifted that a couple of times recently.
All right. Give me a daily habit that helps you stay focused on your goals.
I am a big fan of waking up and just kind of not getting on your phone for the first hour or two, thinking about what you've got going for the day, planning ahead of your schedule mentally and on paper, just to make sure that you're prepared, and go to every meeting or every phone call with an investor with pre-thought out notions and just ready to roll.
All right. We are going to ask 2 more questions. This one is, give me your number 1 insight for managing investor relationships.
I think being your honest, true self is the best way to manage the relationships. Things don't always go well, but being honest with the investors and just being your true self to build relationships with them is the best way to go.
All right, you're out there in Denver. Give me your favorite place to grab a bite to eat.
Oh man, there are a lot of good places in Denver. For a casual spot, taco spot, I really like Perdita over in Washington Park, near downtown. It's a great one.
All right, we'll have to put that on the list. We've been to Denver a number of times. I'm not sure I've been there, so we'll have to check that one out. Well, Lauren, great information. It's great talking to you. I appreciate you sharing a little bit more about what Spartan Investment Group is working on right now, as well as sharing a little bit more about how you're managing investor relationships and also how you are growing and kind of navigating the current landscape. Again, if anybody wants to learn more, they can check out your website, spartan-investors.com. Lauren, I want to thank you again for coming on Multifamily Insights. We look forward to staying in touch with you, and I hope you have a great day.